What is up, guys? Oscar Health just reported earnings, so I want to go ahead and break that down for you guys. I personally own a lot of Oscar Health, so the way we're going to break down this video is first we're going to go over their earnings and what happened. Next, we're going to go over my portfolio, and then lastly, we'll go over the chart and targets. Really quickly, I'm going to breeze through these earnings. They missed on EPS by around 4 cents, and then they missed on revenue, coming in with 2.39 billion, which missed estimates of 2.47 billion. But their MLR and their expense ratio both showed positive reactions. And then jumping down to their guidance, this is where it gets very important. They reported $9.58 billion of full year 2024 revenue, and then guided out $11.2 to $11.3 billion for 2025. And then that 9.5 billion from last year was up 55% year over year. So that is obviously a great growth. And then next year, it's expected to grow another 2.5 billion. So that is very, very important for this company. And that is a great, great growth model that they have. And then along with their MLR, expense ratio, and then earnings from operations all came in positive. They're forecasting around 225 million to 275 million for earnings from operations. And then their company came out with a great focus, and I was very intrigued by this, and I am excited to be a shareholder after hearing this. They are continuing to focus on growth, increasing memberships through open enrollment and special enrollment periods, and then their cost management, ongoing efforts to improve cost efficiency and manage medical costs. That is so important for a growing company. They want to grow their customer base, but also decrease their cost. So as you get more customers, that's more revenue. And as you decrease your cost, that's more profit that you're bringing in because you're bringing in more revenue and keeping more in your pockets. Just a very simple model to follow. And I'm very excited to see what the rest of this year is going to look like for Oscar. We do have some price analysts. A lot of analysts are expecting a $30 price target with lows at 21. So either way you look at it, we're severely undervalued right now. Very quickly, that was earnings. I want to get into my portfolio. I do own 500 shares of Oscar. I increased my position today by around 200%. And I was very happy with my buys today. I was a little upset that I ended up buying before earnings. I expected earnings to be pretty good. So I did buy around 150 shares before earnings and then ended up buying around 150 shares after earnings. But my average price is now around 1501, which isn't too bad. I expect to lower that. I would like to get to around 750 shares before the stock hits $20, I'm sorry, which is kind of my goal. I would like to hit 1,000 shares before the stock hits $25, and then I think I would be totally set to run this thing up. I do have around $7,500 in the stock when you add all my losses together, because I am down on this position. It's the only position in my portfolio that I am down on, and I'm down around 10% for around $804, and then I'm down around $1,300 today. I was up around 600, and then equaling that out, I am down 800, but I don't care. I do quickly want to talk about something, and this is direly important for new investors and all investors, to be honest. When you are investing in a stock like this, I am so confident in Oscar Health, and this is how you should be with any company, like I am with Hims, Hood, and anything else in my portfolio. Whenever you see a stock have a day like this, where their earnings came in, maybe subpar, but their year-over-year growth was up 55%, which I value so much. That just gives me even more confidence that I'm buying at a great price right now at $13.40, and then it had lows around $12.20, $12.28. I'm getting those at an insane discount. We'll talk about price targets later. And technically, with my price targets that we have in play, you could be getting Oscar Health at a 350% discount right now. If you think about it with that standpoint, say, hey, I'm down 10%, $800. I should probably sell and get rid of this. No. Lower your price. Have confidence in what you're holding. Get more equity into the market. This is just giving you more time to get equity into the market. So when that move does go, you actually have enough equity to make some good profits. And that is what I'm valuing heavy here. And that is why I'm going to continue to buy Oscar Health. And nothing is going to stop me from accumulating these shares. And I really couldn't imagine anything comes out in the earnings call that changes my mind on that. But that is going to be all for my holdings. Quickly getting into the chart here, you can see we still have this beautiful cup and handle. Not much has changed. Let's go to the 4-hour. I'll show you guys that extended hours. But we did have this pretty nasty drop. We dropped all the way down to 1160 from around that 1550 range. So it was about a 25% drop at the worst. But I was super happy with that. I said, hey, let it go. And I ended up buying that back. And now we're back up to 1338, and I'm actually up on a few of my shares that I bought. I bought in around 12.40, I believe. So, you know, my last 150 shares have actually made me a profit. And when you think about it like that, that's another bullish catalyst for yourself. Yes, some of my shares are down, but I just bought 150 and they're already up. I'm already up 150 on those shares pretty much, with the price being up $1 since I bought, which is pretty nice to see. And then lastly, let's switch over to the weekly chart. Let's talk about targets real quick. I do want to talk about this because it does get pretty nasty, in a good way. Let me preface that. So currently we're at around 13. Let's go for $13. Let's say we open at $13 tomorrow. Let's go ahead and look at my targets. I have a bunch of targets here. They're all going to happen, in my opinion. It just depends on the timeline here. So I expect us to hit 23.53, which is an 81% gain, and I expect this to come by around early summer. And then I expect this $26 price target, which is around 100%, to be hit by late summer. And then I expect this to really accelerate once we do break that $23 price target and then get above that $26 price target. I expect this to really, really blow up. I expect to hit 34.70, which is 167% return, by around maybe September, October. And then I expect my year-end target to be at this $45 range, which is the measured move out of the cup. I'll go ahead and show you guys how this works real quick. So take this orange line, you draw it from the cup, the bottom of the cup to the top of the cup, and then you just bring it up for the move. That's all it is, guys. Very, very simple. You'd be surprised how easy it is and how effective this actually is. And I expect this price target to be hit, and I would be pretty surprised if it wasn't within about $1 of this price target. But taking it up to that 45.30 range, that is a 250% move from today. And then my year-end target is going to be 270% at that $48 range. Guys, this is a great stock. This setup is absolutely insane. I cannot wait to see this play out. It's going to be absolutely gross watching this thing move up. And then lastly, I have an extended target up to that 2618 at 440% to that $70 price target. That is maybe just a little bit of an exaggeration. That is some possibility. Maybe if we get a Palantir-like move out of this cup and handle, we'll see 70. But I do think my base case is that $45 range for the end of the year, and then more or less targeting that $48 range. But I do expect $23, $26, and $34 range to be hit fairly soon. And I'm saying fairly soon, within the next 6-ish months. Before November and December, I would say that this stock is in the 30s. And I'm pretty confident in that. I don't think that an EPS miss is really going to drag this stock down when you look at their year-over-year growth and then their year-over-year guidance. If you were to take the last 2 years where they reported around $6 billion or around $5 billion, and then they went to $9 billion, and then they went to $11 billion. That is very strong growth. Yes, it's slowing, but 55 to 75%, that is a great growth in 2 years' time. So I am very excited to see that. It is over 100% in the last 2 years if you're taking revenue and you're just looking at that. Of course, you would like to see a few more things. You would love to see this stock get above 1882 first. That is going to be my main stopping point for buying shares, because this is the main break of structure. So when I talk about this is giving you more time to buy, let's go ahead and delete some of these. This whole range down here, under 1882, is all a buying range for me. This is just some consolidation period. I don't understand, or I don't care what happens down here. I'm just going to continue to buy shares. I don't care if it's at $9. I don't care if it's at $18.50. I'm going to continue to buy shares, and I'm going to continue to get my equity into the market. I don't care about my average cost until we get over that $18 range, and then I'm going to probably cut it. But for now, I'm going to continue to buy. I hope I can get my average down to around 14 to 13.50. That is kind of my price range. Sorry, I just had surgery on my nose, so I'm kind of messing with it here. But I do expect Oscar to have a great year. I expect at least 150% return from them, and I am targeting that 250% return by the end of the year with my bullish targets. That is going to be it for me, guys. Please understand what you guys are holding and have conviction and confidence in your holdings, so you aren't kind of faked out of this market. Because tomorrow, for all we know, Oscar could have a great earnings call, and it could be at $15, $16, $17, $18 tomorrow. So you never know. Just be smart. Know what you're holding. Trust in your holdings, and then let it continue to grow and buy while it's down. No one wants to buy high and sell low. You want to sell low or sell high and buy low. Sorry. But this is giving you a great opportunity to do that. So I do hope you guys do take advantage of this and continue to buy some good Oscar shares right here. But that is going to be it from me, guys. That was Oscar Health and their earnings report. Make sure you guys do like, subscribe, and comment down below what video you guys want to see next. I'm coming out with a video on Trump's tariffs and how that impacts the market later tonight. So make sure you guys do stay tuned for that. And then also click that link in the description below. It'll send you guys to our free Discord. And I will see you guys in the next video.